Welcome. We're going to have a special masterclass in person April 30th with my good friend Carlos Rodrigues. Carlos has been putting a lot of miles on his vehicle
Yeah.
in the last couple of years, driving back and forth from Cleveland, Ohio, of all places. And he's taken what he's learned in real estate here in Ontario and multiplied his portfolio tremendously in Cleveland for several reasons. And I wanted him to come in and talk about not only what he's doing, but why he's doing it and how it's working and how you can do the same. And then I'm going to talk about a few other cities in the US that I've been researching that I think could work well too, outside of Ohio. And we're going to save those for the presentation. We don't want to give too much away. And I'm also going to show just a few different things that are working right here in Ontario because we still live and I still invest here in my own backyard. So, Carlos, I don't want to steal the thunder. Why don't you tell us maybe, a brief story? What first got you interested in Cleveland? And then maybe we can look at a property example so people think it's real. No, it's real.
Yeah, no worries. So, I mean, my background, I've been doing a lot of investing for quite a long time. You and I have, basically started at Rockstar about the same time, and I've been buying and selling properties, fixing them up in Canada for about 15 years, and then it came to a point where um, about the end of 2019 that you kind of see the writing on the wall. You know, it was tough to get mortgages. It was, just things weren't cash flowing the way that they were, and I ended up uh, needing to look for different markets because eventually you're going to get to a point where we were going to get to a point that inflation was going to be affecting not only the prices but everything else that comes along with real estate investing. So I needed another market that was going to provide me the cash flow that I wanted to build, that to continue the portfolio, that I was growing, but
Yeah.
also address certain problems that I was running into here as a self-employed individual,
Got it. If I
getting
can interrupt for a second, I think you ran into the same brick wall a lot of us run into in that you get a few properties behind you, you're using traditional A lender mortgages, then they tell you to go to hell because you have too many mortgages and now you're self-employed. And some people at that point, they reach out and they end up going to commercial real estate because those same problems don't apply. Some people end up developing properties or using different strategies in real estate. And it seems like you went to a totally different market in a totally different country. Is that right?
yeah. I ended up going to a couple of seminars and seeing what a few other things other people were doing, and I just kind of came to that realization that Canada is only what, maybe 2% of the world's economy, that what I could possibly do in real estate. So
Mm-hmm.
um started looking around, kind of sat down for a few hours on Zillow and just kind of saw what was on there, and started landing on stuff in the Midwest that it was just, you kind of question whether it was actually real. You know what I mean? And like buying a house for, now keep in mind this is a real fixer upper, but I mean I was finding houses for 30,000, 40,000. you know um
Crazy.
it was just ridiculous numbers, and you start, I mean, the wheels start turning, and it's
Right.
like, how many of these could I buy? You know what I mean? You sell one property here and you end up buying 12 in another location.
But to be fair, I mean, there's probably lots of locations and lots of places in the world, and maybe probably even the US where you can buy cheap properties. Maybe even they're not 30, but maybe they're 80 or 90 or 110, which is still cheap.
Yeah.
But you focused on Cleveland and you made a real business out of it. That's what I appreciated about what you did. You didn't just buy one property and say, hey, I'm amazing. You bought several and you're still buying and you're working with other investors, right?
Yes, exactly. It just came to a point. I mean, I don't know. Maybe it's just that I've got a social bug or something like that. I don't know. I like to deal with people, but saw other people that were in the same boat as I was, with difficulties up here, continuing to move to the next deal, to keep
Hmm.
stuff that you want on your portfolio, and I've always been one to share, as far as what I've learned. I've never been one to shy away from talking about finances or how well we did this or that. You know what I mean? So it
Yeah.
just kind of filled that void, and I started teaching people about what I was doing down there, which evolved to doing tours, taking
Hmm.
people down when I would go down. I mean, I'm going to go down and look for properties anyway, so I might as well invite some
Might as
other
well
people.
rent a tour bus and get people on
Let's go. Just kind
the bus.
and at first we were doing large groups, but I found that the smaller groups, up to like 12 people or whatnot, we all get into a bus, or but not a bus. I mean, it was the 12 seaters or whatever, and
Yeah, yeah,
we go from house to house, and we bang out 14 houses in a weekend. You know what I mean? On a Saturday
yeah.
morning, and but we have the conversation, how's this happening? We end up having some great conversations at dinner, and
It
it's kind
works.
of it works absolutely.
So
And
let's just so people don't think we're crazy. Let's take a look at. Why don't you show us an example of some numbers, so people, I know we're hyping it up a little bit, but let's show them some numbers so they know it's real.
all right, so the one I'm going to show you is probably my favorite property. um it Let's do away with that for a second, just to show you. It's on Zillow, so I mean, so people can go on there and check it out, see, verify the numbers if they want.
Hmm.
The address is 1537 Coventry Road. It's a duplex. Okay, so it looks like one house, but it's actually set up as a duplex, 3 bedrooms per side. And can you see that?
Yep, yep. You got 3 bedrooms, two
Yeah.
units, 3 bedrooms, one bath each, rented at 1,400 bucks.
Well, it actually, we'll get to that, right? I mean, it was 1400, but just to give you an idea of the quality that we've got here. So it was basically 75,000 per unit. This
Hmm.
was probably as turnkey a property as I've ever bought down there. I mean, everything
Yep.
needs excuse me, a little bit of a polish from time to time, but that was probably the least that I've ever done. So this is a calculator that I like to use. I picked it up from another investor who was an American, or is an
Yep.
American that buys heavily in the Midwest as well. So I bought it for 150,000. The rents were 1,400 per unit plus utilities. Okay, and I like to focus on Section 8, which is a subsidized housing program that they've got in the United States. There's over 3 million people in the United States that are on this particular program. And essentially, the US government uh, subsidizes the majority, if not all, of the person's rent.
So you're buying these houses, sometimes they're nice, sometimes you're doing large renos, and then you're getting these fantastic rents, sometimes even paid by the government, and then, within a short amount of time, like how long does it take before you refinance this?
Typically, I mean, from start to finish, you're probably 3 to 4 months. I mean, it could go longer. It has gone longer in the past. I
Hmm.
mean, US, I mean, they like their bureaucracy, man. And especially with subsidized housing, there's, I mean, inspections upon inspections that come through. But once you get out past all that stuff and you have, a nice, well-oiled machine going, it just pumps out money. It's great.
It works, yeah.
It's amazing. So now,
So worst
before,
case, sorry, worst case, you're saying 3 to 6 months, you can refinance and take back a significant, if not all of your capital.
yeah. Now, keep in mind, if you don't have a green card, you're gonna have some issues with as far as the loan to value, right? As a foreign national, um, they really reduce the amount of loan to value that you can get on a refinance. I mean, at this point, I think the maximum we can do is about 65% loan to value. So you're going
Yeah,
to be leaving some I mean, unless you've purchased at an incredible purchase price and got a fantastic evaluation after repairs, you're going to be leaving a little bit of equity in there. But at the end of the day, the numbers speak for themselves, right? So the way that this calculator works, if you can see here, it's got current pro forma analysis, and that's basically the $1,400 per unit that I've got. Okay.
Yep.
And then this is actually what it's been um, increased to. So next month
Really?
it starts at 1686 per unit.
Wow.
Yeah, and that's coming direct from the government.
So, and so what's the numbers at the 1686 there? Is that calculated in the return, or is it
Yeah,
at 14?
so basically you look down here at the stabilized pro forma analysis,
Yeah.
and it ends up with a cap rate of almost 18%
That's
and an
hilarious.
ROI of almost 40%.
Yeah.
Okay.
So
The
for those
net
of you, sorry to interrupt, Carlos, like 40% ROI means it takes 2.5 years to recover the entirety of my down payment just from the return on capital.
Exactly. Exactly. So I mean, sure, you might be putting 30% down, but show me a house, in Ontario that unless you've got like five or six ADUs in the backyard,
Yeah.
you know what I mean, that's going to get you that.
Yeah,
So
nothing we can do in Ontario is even close to this, except for the CMHC MLI program. But that has its own hurdles and disadvantages also. And I think it's amazing to open up this kind of strategy and teach people, they can do it. Like there is, if you're struggling here, there is hope out there. And the one thing you can't have is excuses. And this is why I kind of want you to present. So I don't want to give up too much. But let's just say on this property, am I confident to say that you're cash flowing just under $1,500 a month on a $150,000 purchase?
pretty much,
Yeah,
yeah.
that's insane.
Right.
So
Like
yeah,
these
if you're
are
complaining,
actual numbers. These are
yeah,
actual
yeah.
numbers. You know what I mean?
No,
Like
you're lying.
my
Carlos
my
is
property
lying.
tax, my property tax is $1,600. It actually just went up. It used to be the property tax, and frankly, I got to go to the municipality and see what's up with that because it used to be $800 for the year on my taxes. But yeah, I mean, unless you've got a really crazy maintenance bill for a particular month,
Yeah,
here we go.
yeah, you're
Right?
cash flowing extremely well. So let's leave it there, Carlos. I know you have a lot to say, but you're gonna have an hour of time on April 30th to kind of to jump into this and show people the business side of this and how they can do it themselves too. And Carlos will share how you can jump on one of the tours and try and get some of your own cash flow, $1,500 cash flow a month properties for 150 grand, maybe 160 if you're if you're being a
You
bad
know
boy.
what? I just missed out on a fourplex that the cash flow in that was going to be for me and my partner. We were each going to take home $1,500 a month,
Isn't that funny?
and the purchase price three 67.
360. It's insane. So, even though the US dollar or the Canadian dollar sucks compared to the US dollar, once you get your money in, you're earning in USD.
Oh
Like
yeah.
you got to just get over the hump because it doesn't
Oh
matter. And if the Canadian dollar recovers, you just buy more.
yeah.
That's really so we're going to talk about that. I don't want to give away too much. This is some stuff you don't want to miss. I'm going to talk about some different cities, okay, in the South USA that I've been doing my research on that I'm going to go visit in May actually, and it's going to be a great class. I'm going to show you some stuff that's working here. It's going to be awesome. Don't miss it. April 30th, 6:30 p.m. in Oakville. Thanks, Carlos.
No worries.